Chris is calling from Manhattan, New York. Chris, you're up.
Hey, Peter, I just want to talk about the inheritance tax. I think it's just wrong, and I think it's destructive, and it's more or less stealing, in my opinion. My grandfather died in late December. He lived 90 good years, but he was obsessed with the fiscal cliff deal, and he was so worried about his his estate being taxed at 55% on the federal level. I'm of the belief, just by looking at his medications that he wasn't taking towards the end of December, that he prematurely ended his life because of it. And I mean, it just has so many destructive factors when you're taxing someone's estate after they pay tax their whole life on so many different levels, and then to try to take it upon death, I just think is just criminal.
Yeah, it is. I have mentioned that it is, I think, one of the most destructive taxes that exists, and it's all about, petty envy, that it's not fair that somebody should inherit money that they didn't work to earn themselves. And of course, it's not necessarily true that they didn't help. I mean, a father can own a business and his son can be instrumental in helping him to grow that business, but the father can still maintain ownership. And then when he dies, to basically destroy the business rather than allowing the son continue to operate it. But the big problem with the inheritance tax, apart from the fact that really, it basically says that all the property belongs to the state. Because if I don't have the right to give my property away or to leave it to my heirs, then I don't really own it. The government owns it, and they simply allow me to give a piece of it to my heirs. But other than the moral and legal problem I have, is the economic consequence of the inheritance tax is very damaging to the economy, because it forces businessmen to limit their horizons to their own lifetimes. And they build a business with the intention of liquidating it, not with the intention of growing it and passing it on to future generations that can benefit from the accumulation of capital and know-how and expertise. It is a very destructive type of tax. And, of course, it spawns a huge industry. I mean, I'm working right now with an estate planner, and maybe some of my other clients might have an interest too. But, of course, there are ways to try to mitigate the damage of the estate tax. And it's not cheap. I have to spend a lot of money. I have to set up a lot of complicated structures to try to protect what I've worked to earn so that it can be maintained. I mean, one of the reasons I want to protect my business, too, is to protect my employees, protect my customers. I mean, not only so I can leave an inheritance to my son, but if I were to die without any kind of estate planning, my companies would have to be liquidated. My business would have to be sold. My employees would be laid off. And maybe my heirs wouldn't even get the real value of my business. I think the business is worth more intact. I think if we had a fire sale in order to pay off the estate tax, and of course that means that the estate tax is even bigger because you forced a liquidation of an asset at fire sale prices so the heirs can pay the taxes. It is a devastating tax. There should be zero estate tax. And in fact, if you think about it, if I earn a dollar and then I pay 50 cents in taxes and then I die and the government takes 50% of that, I'm only keeping 25 cents of what I earn. 75% of it goes to the government. It is outrageous. Hey, we got a break coming up. Hour 2 of the Peter Schiff Show is coming up. We're going to take more of your calls as Open Line Friday continues.